In other news, I think the most interesting topic to me in the world right now is support and resistance. Simple, effective, timeless, classic principles of trading that anybody can take advantage of, and most people don't because it's not flashy, it's not fancy, it's not expensive, it's absolutely free. No matter what charting program you have, you can do it. That's why this week I'm going to jump on the computer here starting today, and I'm going to start reteaching those timeless principles of support and resistance that are never going to go away, never going to stop working. We're going to talk about measured moves and pullbacks and bounces off support and resistance and the reason that something is called a trend. We get away from the true reasons behind a trend, higher highs and higher lows and lower highs and things like that. In today's video, I want to go back to the future, return to the past of the future of the whatever. I'm going to jump over to a screen share and I'm going to talk about the pullback method that back in the day I called the Winnipeg Special. Okay, hey everybody, here we are in the charts. Here's all you got to do. You got to look for areas where you can draw a trend line underneath price. And look at all these V's. Look at all these flying V's, I call them. These are areas where a trend line deserves to be drawn because price dropped down, spiked, and then retraced. And it made what I call a little pivot area or an axis or a point at which it bounced. We're going to take a trend line and we're going to connect those spots. So we connect those lows to each other. That's step one. If you want to trade pullbacks, that's step one. That trend line is called a trend line because it designates an area where price is making a higher low. There's a low and there's a higher low. And at the same time, it's making higher highs. Every time it reaches up, it keeps making a higher and higher high. And we could put a couple of trend lines in here, and there's nothing wrong with putting a reasonably big number of trend lines in your charting software, then using them, deleting them, and then redrawing them all over again. Never worry about doing that. Okay. If we move forward here on the chart, you're going to see that price struggles to drop below this trend line, but finally will eventually be able to do it. And you can see here, it falls below both of those levels. And that's going to spell the end of the trend, at least in terms of, well, at least in terms of the definition that we've made. Now there are lower lows. This is a low, and now it's making lower lows. This is a high, and now it is making lower highs. This is it. You could use moving averages in conjunction with this. A lot of people like to use a 5-day moving average, and if price starts to drop below that 5-day moving average, then you can feel like the trend is ending as well. I like to keep it simple. I like to keep it, clean here. And then price drops below, and look at what it does almost immediately. It drops below that trend line, and then it pulls back up to it. Do you see that it sort of knows where that trend line was, drops below it, and then pulls back up to it? This is what I used to call a Winnipeg Special. I don't even know if Winnipeg Special. Yep, I found it. I made these shirts, I don't know, like 7 years ago. And here it is. There it is. The Winnipeg Special. This is what the t-shirt says. I'll have the Winnipeg Special. And I think Winnipeg is even spelled incorrectly as a, further offense. But I called it a Winnipeg Special. Why? I was teaching a seminar in Southern California, and there were a bunch of people from Manitoba. And so I named this after the capital of Manitoba, the Winnipeg Special. And that is, trend line breaks, the trend is over. The trend is now possibly going to go down, or at least we're going to see a sideways market. And when price pulls back up to that trend line, that's a sell. That's where we put the sell order in. You don't put the sell order in on the break of the trend line because, well, we just don't do it. We don't know yet if it's going to bounce. We really don't know if it's going to bounce until it falls all the way below the trend line, at which point it's too late to get in. And then we wait till it rises back up and hits that trend line. And if you move forward, you're going to see that price will make other additional attempts to do the same thing. And these pullbacks, these Winnipeg specials, if you will, they happen over and over and over again. And these are just examples in a seller's market. I didn't know that was going to work. That is ridiculous, right? Look at that. Trend line breaks, lower lows, and boom, we retrace to the trend line, pullback. So they're called pullbacks, throwbacks, Winnipeg specials, if you will. That's a chart pattern. It's a simple chart pattern, and you could spend your entire trading career, and this is all you would have to do. You wouldn't ever have to learn anything else or do anything else. In the rest of these videos, over the next couple of days, what I'd like to do is talk about stop losses and profit targets and look at a ton more examples from FX, stocks, and futures. If you like the video, I'm so glad you're here. Subscribe to the channel. That would mean the world to me. Like the video. Leave a comment below and say hello. I love you all. Have the best day ever.